All right, Harry. It's Carrie, of course. It's this is for Monday, April 1st. I haven't done a lot of prep work for this video. I usually spend 10 minutes combing through things, but I've been kind of swamped today. I'm just sort of going to wing it and maybe do some analysis on the video itself. I think we should start with the markets that we are in. So that's the 30-year bond, and I know we're in the cattle spread, and we're in gold. So let me start with the 30-year bond and have a look-see. Um, so this is that daily formation, and it comes in Monday at 149.03 half. It's giving me. It's funny that it. Are there half ticks now in let's see here. No, there's not. But for some real weird reason, it's giving me oh 03 half. So let's just call it oh 04. If we settle below oh 04, 149.04 on the daily chart anyway, doesn't look good. That's that long-term formation you're now familiar with. On the weekly chart all week, let's see if I can find this sucker. There's a 30-minute bar, by the way, last Friday. Damn it, come on now. All right, weekly. Okay, all week long, it's at once the same price, 149.03 half. We can call it 149.04. And just an FYI that, well, let's assume that we hold above it. This is the channel structure I'm anticipating over the coming weeks. And this is one where I'm not at all opposed to unloading that call. I think, as I mentioned last week in a video, it's climbing into the 155 handle later April, where I think we could, if the market gives it to us, get out of that call and then reload if we get a settlement above it. Because ultimately, I still think, the low 160s are the target, but along the way, same structure here, but on the weekly chart, this is respectable for its ability to contain monthly highs. And let me go ahead and take another quick look at this daily chart. I'll zoom in to see, where is, this is really insignificant. I, but I'll throw it out there anyway. It actually contained last Friday's low, and it's at 149.20 today. So, bottom line here is if we break or open below 149.20, then I think this is likely, this 149.04. Let's just call it 0304 all week long. Later in the week, this daily one gets down to, on Friday, gets down to 149 even, and 149.01. So very low 149 handle is our base of support. If we settle below it on a daily basis, oh, I do have to get this. I'm going to pause. All right. Looks like video resumption. I've actually never done this before, paused a video. But anyway, bottom line, low 149 handle for the bonds, bullish above, and we should continue higher in the coming weeks. This is that 154 handle target. The big target is the low 160s, as I just mentioned. So there we have that. Let's go on to gold. Where's gold? Here we are, gold, gold, gold. All right. Came close to testing this resistance. Here's our resistance, 1308 half for the day itself. We did settle higher on the day, put out a new low. Probably will continue testing this whole area in here all the way up to 1314.9. But honestly, if we settled above 1308 half on Monday, I'd say let's just get out. Still expecting, though, below 1308 half, this 1257 ascending two-thirds speed line. We do need to obviously settle below these lows, which are sort of a short-term floor. Holding above these, we continue testing this channel bottom, but if we settle, say, below 1287 half, we continue south into this narrowing range of support where I say we cover the call. And let's finish the current positions with the live cattle spread. We're still below this. If we close above it, obviously not good. We should continue into the mid-4 area. That high settlement is 4.5. What else do I have here? I know I've got some sort of a channel structure there. This thing has been holding the lows roughly, although I'm not crazy about it because there's all kinds of both sides of this formation trade from weeks ago, months ago. I believe this is it. Yeah, 4.525. So if we closed above this 3.350, then this becomes a realistic 1 to 2 week target. And quite possibly that sell signal rejection could quite easily, yeah, yield this upper area, which is now at 5.18. And over the next week or two, we'll get into 530s. I think I've got it at 522 something. And I'm just going to leave it there because it's changing every day. But holding below 335, this is likely. Let's call it 1.8 over the coming weeks. If we can close today below the low settlement from last week, which is 2.900, that would be good for us. So 3.350, meaningful pivot point into later April, and bearish below, which we're positioned for. So let's take a look at the lean hogs. You know, I don't know if you listen to the audio. You probably get a more detailed analysis if you just do that. Because I'm trying to squeeze 20 markets into this recording. But we settled below the speed line. Still have this channel formation. This speed line, I think, is an intraday containment level for Monday at 88.80. But this channel formation is the one that if settled below, and you know, with this, let me go ahead and just pull up the let me go ahead and pull up the newsletter itself. Takes long enough. 92.27 is that formation now, and below it, the lower 70s. You know, this is the making of this this possible, you know, just give it all back. Easy come, easy go. Back into the low 70s. You got these little stair steps all the way down, 87.47, and then 78.80, which is an ascending 2/3 speed line off of this low. You got little steps all the way down that should be respected for, I'm calling this multi-session containment now. Can contain selling into midweek once tested or above which, we've actually been testing it now on Friday. This upper area is in reach over the next several days, but continued weekly settlements below. Not real crazy about buying this market. Not real crazy about buying this market. I think the volatility is too goddamn high for us to participate in this to begin with, but it's worth watching just from what could happen in the live cattle market. So with that said, there's that online office. It's like a beast. It doesn't even close quickly. Well, let's go to feeders. Feeders are testing that long-term support at 148.17. I have the weekly chart here, page 1 for Monday only. This is our big area. And above which, if we can settle the week above it, now I wouldn't be surprised to see us close below it today and get down to 145.20 within the week or within the day, perhaps. But the critical factor will be, do we settle the week below it? You know, and if that does happen, do I have this illustrated? I do not. I did show this to you. Let's go ahead and take a quick look-see here. Feeder cattle weekly. This channel formation I like because of its symmetry with this trend line. At least right now it's synchronized in the upper 138 handle. So we closed below 148.17 on Friday. Look for another 10, almost 10 handle down continuation within, I'm calling it 3 to 5 weeks, could be sooner. And this is a meaningful area. If we, and it can, as I've been saying, contain selling into summer trade. But if it doesn't, you know, I was saying that closing below this speed line should yield a 126 handle support, but I'm off that. I think it does mean 138 handle support, but we need to settle below 138 and change to yield this 126 and change longer term support level. I've got, all right, here we are. I'd have it more adequately illustrated. Okay. Yeah, when does this index number come out? This is that feeder cattle index, weekly chart. This week I've got 140.87. So, I don't know what kind of comparison we can make between 140.87's channel support. You got 141.02, which is the high of the low, and we gapped above it last week. So if you just want to say a big area between 141.02 and 140.87, that is somewhat synchronous, if you will, with that 138.17. Sorry, 148.17 May contract support in the feeder cattle futures. Do they line up well? I don't know. But anyway, there is some validation here on this particular chart that we are now above an important area, and above it we have a continued updraft in the index itself with 146.73, sorry, 145, sorry, 146.24 being kind of our next upside objective in 1 to 5 weeks, depending on volatility. Hard to say, right? So there's that. On to June live cattle. I'm calling this, I'm demoting this just a bit because I just want to give this thing breathing room, This 117.47 is our prime support for the June contract, and once tested, the market can rebound within weeks, several weeks, 3 to 5 at the most, back into the upper 123 handle resistance. But if we close below 117.47, here we go with 111.85. I'm going to pull this newsletter up because 111.85 is basically the start of a wide range of long-term support. The weekly chart's got 109.40. Is the same speed? Is not the same speed line? Yeah, it is the same speed line off the spring low. And so if we close below 117.47, then this 109.40 to 111.85 region becomes the next 3 to 5 weeks, something like that, where this contract should bottom out into expiration, and possibly the broader cattle complex through summer, which would by that point involve the August contract. Speaking of which, 114.45. I don't even put the speed line on there today. We actually settled below it. That's why I'm so reluctant to call this like a big range now, because I think that's not a speed line, that's a trend line. I'll find it here. God damn it. There's the illustration. Come on now. There we go, man. Come on. Well, I just might not find it because I don't want to spend. Anyway, we settled just below a long-term speed line. That ain't it. Okay, I got to get rid of this obsession with finding the speed line. That's not it either. All right. So anyway, let's go back to the 115.82 is the long-term speed line projected off the April low. We are below it, or we closed just right about at it. So it's our resistance tomorrow if we open below it. And in fact, 114.45 is attainable on Monday. This August contract support. If we close below it, then 110.07 becomes a 3 to 5 week target. And I'm thinking out loud here, if by then the June contract will be rolling, and no, it won't. Not even close. It'll be early May. It'll have weeks left. So there's that. 114.45. Significant downside tipping point through April. Until then, this is bottom picking territory. Let's go back to this chart here. I'm just going to draw a new one. We'll call this the high, the high. None of these work until we get to this more recent one. So, I forgot for a second the point I was going to make. Oh, I know what I was going to say. 114.87, 114.45. We got 115.30. The low was 115.52. So this whole area, I mean, if I just start putting trend lines out, 114.55, 114.87. So even if you don't have channel structures, you can see there's validity for this area. You also have this low at 114.50. So if tested today, it is a prime area. Now this channel formation will continue rising, of course. And if we close below it, then once again, 110.07, 3 to 5 weeks. Until then, it's a good area to buy into, and I'm certainly open to that. 120.70 is our long-term channel resistance. And there it is. I've got 72 here for some reason, but anyway, it contained the highs, the move high, at a nice intraday violation, but we never settled above it. So that is in reach now over the next 2 to 3, 3 to 5 weeks, holding above 114 and change. Let me go ahead and move on. We're out of the livestock now. Take a look at crude. If I leave one letter open, the second's always open fast. 61.89 to 62.37 in reach this week. In fact, possibly in reach today if we push or open above 60.46. This has been a target for a while. The RBOB tested its respective resistance and it's fallen back, but it came back a bit on Friday. So this is our area that if tested on Monday or Tuesday, I think we start sniffing around for some puts and pricing them out. You know, I don't think the market's going to sell off aggressively right out of the gates as soon as it tests it. But within a matter of days or a week or two, I think, yes, likely. And this is our support area on the way down, 56.48. You know, ideally, we get up in here, we buy a put, you know, maybe we buy 56 puts or 57 puts at that time. And then we have the luxury of deciding whether, once we test this, that we want to just get out. You know, this is similar, I'm thinking out loud here, to the 30-year bond, you know, situation where we, you know, we bought against a long-term buy signal, and then we're going to bail out a little earlier, and then get back in. And we could do that here potentially. We buy puts in the 62 handle, let's say, and then we unload it. You know, we liquidate in the 56 handle when it tests this area, but then when it closes below it, then we just jump back on again. And at that point in time, because once we test this 62s, as I've been saying, the upper 40s are in reach within several months. Crude oil, corn, that was a big move, and it does look. We were talking about this. We've got 348 and 3/4. We might test that today if we break or open today below 56 1/4. And this is the start of a very handily narrow range of long-term support down to 347.5. I think this is worth buying. I'm certainly not opposed to it. If we close below it, what I like about this is, you know, we're talking about 1 1/4 points that we can buy into. We could buy calls, but I will say that closing below 47.5, and that would also be a settlement below 48 3/4 on the daily chart. So I think even on a daily basis, we would just bail and let that thing play out because it could get ugly. You know, I know you'd mentioned about kind of a lackluster downward progression if we settled below 347.5 on a weekly basis. And I agree with you. There's all kinds of stuff down here at 315, 318, 302. We could get hung up in here for weeks. But I do think that this 275 1/4 is not out of the question over the months ahead and over the next year or two, 219.5. You know, you've got this, I'll just pull this up on the, this video is going to run over half an hour, I suspect. Pull up the corn, the weekly chart. You know, if you take a look at this low 318 up to the high, 454 and a quarter. You take a look at this low, 314 and 3/4, the high 417 even. If you just flip that to the downside, it does take you into the 180s to 210s. And I've got 219.5 as a long-term trend line that's projected off that 1987 low of 142 even. Man. And then you got this low in 2005 of 187 and a quarter. So, and you can see all this trade here between, well, these are the 240s, 250s, all the way down into the 180s that we spent a long time trading. So, back to the newsletter itself. Yeah, I think we wait for this area to buy, and that's about all we do right now. Am I crazy about selling 365 and 3/4 on a rally over the next day or two? Not really. Because overall, holding above 347.5, this market can stop anywhere on the way down and then turn up. But right now, 384 even. This should probably be a multi-session containment. It is a channel bottom from this low to this low against this high. And we also have a descending 1/3 speed line against this high you can't see that's way back here, projected against this most recent low. That really should be 4 stars. So, but we're not going to see it anytime soon, at least this week, in my opinion. So, May, corn, bean meal. I don't think I don't see the appetite for us to trade that, so I'm not even going to go in there. But let's go to the soybeans. Come on, soybeans. We're getting close to testing 878.5. The next 2 to 3 weeks, we could test this and head up here within a week or two, which is nothing more than a descending channel top against these lows and this intermediate high. Pretty classic. 909 and 3/4 our upside pivot point into later April. If settled above, would yield 940 and a quarter longer term resistance within several weeks. Inversely, closing below 878.5 does indicate this long-term support at 857 and a quarter over the same 2 to 3 week time horizon, where the May contract can bottom out into expiration. So we could buy this as a long-term 4 stars. If we violate 857 and a quarter, this thing looks ugly. I don't have it illustrated, but you know, we're talking 812. I don't even write about it because it's not going to happen anytime soon. But I've got 812 even, and then the 740s potentially as like a longer term summer low if the bean market just continues cascading south. But that's all we've got for beans. Wheat we were in, and I've got the newsletter here itself. Similar structure. I'm going to show you this 856 and 3/4, even though, you know, we're not in this anymore. If we were, I'd be saying let's get out with a settlement below 856 and 3/4, because then this low area in the lower 430s is likely then within a matter of days. 431 and a quarter. So I still think we can play off this. We have a new move high last week and a negative settlement on the week itself. It's kind of a neutralizing effect. And closing below 856 and 3/4, we should retest this 431 and a quarter within a full week of trade. 431 and a quarter, significant. We can buy it again, but if settled below on a weekly basis, which would be 427 even, would be a 1% violation this week. This market continues south into summer trade. We can talk about that as a 431 and a quarter pivot point acquisition, then reversal sort of thing. Holding above this, the low $5 area is still ultimately expected. And, you know, we're not far from testing it. I got 481 even here is likely, holding above 456 and 3/4. 481 even able to contain weekly highs, but I do think the market sort of wants, if you will, to reach into the low $5 area over the coming weeks. And that is our significant overhead resistance, both in the daily and weekly chart, 510 and a quarter. So we've got 2 points to play off of here in wheat, 431 and a quarter, and all the way up to 510 and a quarter. All right. That completes the newsletter stuff. Oh, S&P 500. I'm going to just pull up that I think it's worth listening to the audio. It's like 4 minutes long today, where through our analysis together with the NASDAQ, I did throw out sort of a condition to follow through buying. We did settle above this 28, 24 and 3/4 formation in the S&P. We also settled at a new high settlement for the week itself. So this thing in and of itself looks poised for upward continuation. However, I did post the NASDAQ. 75.34.5 this week is its resistance, and the tech sector obviously is going to have a lot to say about whether the broader base S&P 500 can maintain strength into the later second quarter. And without a settlement above 75.34.5 June NASDAQ, this particular buy signal is likely to fail. That's the bottom line. So we could play 75.34.5 if we do nothing at all in the NASDAQ. If we settle the week above 75.34.5, then we've got sort of a double buy signal if you include the S&P 500, and this thing should continue higher over the coming weeks. I've got a channel top here, these lows against this high. It's in the low 8,000s if I recall. So that could be a nice play for the NASDAQ if we could finagle it. Until then, this S&P 500 could quite easily settle the week back below 24 3/4. And in fact, I don't really have a decent downside pivot point until we settle below this formation here. And that should yield 26.49 3/4 within several weeks, which is kind of a mid to longer term support region. So there's the S&P. And let's continue with, take a look at the currencies. I haven't updated my currencies yet. I'm sorry. I keep forgetting to do this. But we've eased back in the euro currency. We're likely to test this 12-12 support this week, 5/8 Fibonacci from the 16 low to the 18 high. 5/8 back has been holding. It held actually a few weeks ago. It can continue to hold. If we close below it, it continues easing south. This market is bearish below this 1502 formation, and it doesn't turn bullish until we get above 1586 for the entire week. So I'm going to change that number to at least update it here, 86. I also have to include the dollar index. I've got a lot on my plate early in the week, but as we get into midweek, I will update all this stuff. And also include the US dollar index. Oh, nice little rally in the Canadian. This is the real deal here, by the way. This is CA6, so it includes nitrate as well. This is if we get a settlement today above 75.25, cancel your ass here, remove it. 75.25. That's it. Settlement today above 75.25 June contract, and we are then sort of weekly chart, weekly. That last was a daily. This is the weekly chart. This would be our target. Upper 76 handle. You know, of course, near term, we'd have this as our next stop. You know, we could get to if we close Monday above 75.25, Tuesday could actually reach 75.78. And then you've got little levels all the way up. If I were doing that's actually corresponds. So we could actually top out there for several days and then come right back at you and test our patience. But I'm willing to go long with a settlement above 75.25, and we could watch this on an intraday basis if you like. If we're late in the day and it's trading at 75.46 or 75.35, sort of, we could then go long on that alone. And then what do we have? This is trend line. I'm just going into the possible targets. 77.48 is above this long-term area on the weekly chart. So anyway, you've got that. But until then, this is a resistance area. Low, low. Yeah, I mean, that looks... There's day support at 74.89. We should test 75.25 today, Monday. Anyway, you've got it. There's our pivot point. I like this because, let me redraw this. This is going to be a long one. We're already at a half an hour. Sorry about that. Hope you've got half the day here. trend line, sorry, speed line. It's just a tad higher. It all comes together right here, 75.25. That speed line was also roughly drawn, but it also says 75.25. So yeah, this is a nice pivot point. I'll say no more. Damn it. Japanese yen eased back again. I need to create the real Japanese yen that includes overnight activity, but we haven't really been watching that, so we're not poised for anything there. And the British pound eased back. So 29.09 is the support this week. And I don't think we're going to find, yeah, okay, that is the support. That's the downward pivot point. Until then, this is nothing but a range of support that can absorb selling through April. And in effect, above which, once again, 38 handle in reach. But if we close below this, we should continue south. You know, hard to determine the targets, but 24.93 anyway, and quite possibly this low in the very low 20s. We just covered gold. Take a quick look at silver. In the weekly chart, it held essentially. 1508 half is the support this week for silver. And we can continue watching that. If that continues happening, this is bottom picking territory in line with these highs. But if we settle below it, it's similar to gold. Actually, it looks, I think I mentioned this before, it doesn't look altogether different than the British pound. Copper. Right back at you. So it doesn't want to go down. This was a failed long-term buy signal. And it's like, not yet. I wouldn't be surprised to see this thing rally nicely in the next week or two based on that alone. So copper still looks good. In this area, channel 1, 2, 2.85, that we're right in there. Platinum I'm not going to deal with. Let's say the 10-year is confirming all this. Yeah, 10-year, that's the 10-year support right here. This channel 1, 2 this week is at 123.11 half. So that's and the 10-year has rallied further away from its buy signal support than the 30-year has, and it's holding. So I was about to say maybe we don't dump that call in the bonds until the 10-year settles below. No, I don't think so. Maybe we dump the call in the bonds, and then if the 10-year gets down to its support, we buy it. That might not be a bad way to go, actually, if that were to occur. You've got a range of support. This is a daily chart between 123.11 half and 123.06 and 123.08. So this is a base of support for the 10-year that I have no problem buying into if the market gives us that chance. Same on the weekly chart, 123.10. It all comes together in the very low 123 handle, much like the bonds in the low 149 handle. NASDAQ we just covered really with, and there it is, 75.34 half. And here are our downward points, 63 half. That's got to be 72.63 half. So there's our downward pivot point into next week. 72.63 half. Then we look for this and so forth. This is the big area. 75.34 half. All right. Take a quick look at the softs. Sugar, nothing going. Same situation. This week is at 13.16. Breakout resistance into summer and even later year. Until then, we're meandering. with viable support down at 1106. So that is actually already updated. Cocoa rather. A little bit of a rally here. We should test this upper area, 2350, possibly this week. And that would be a buy signal if settled above on Friday. Good for likely this, 2512. So what does a 1.5 point rally in sugar look like for us? And that could be a 3 to 5 week play. If we hold below 2350, the market can easily slip back over the next month, 2 or 3, down to this 2043. And then finally, take a look at coffee, which also includes, well, there's coffee. It settled up on the week after putting on a new low. Do we buy it? There's stair step. This is tough, and we're not really testing any long-term support region. We've actually violated some long-term lows. This is our next support way down here in the 86 handle, which it is possible by the end of April, possibly. And here's our big resistance area. So nothing going, but somewhere in here we've got a cotton chart. There it is. She's still climbing. So we've got this channel at 79.70. I might as well label this. And this channel at 80.42. That's the big area this week. So, you know, I don't know what the volatility here looks relatively subdued. Do we buy puts up here? I'm not opposed, because holding below it, the market can quite easily turn south. Inversely, if we settle above it, I say we buy calls. It looks like a nice rally underway. I think that's it. Wow, 37 minutes. All right, Kevin. We will talk tomorrow morning.